Hey traders, this is a live webinar about price action education, so let's just wait a few minutes for everyone to join and then we will continue. We'll wait a few minutes for everyone to join, so if you just joined, just hang in there for a few minutes and we'll get started. So if you have joined, there is a chat here in the YouTube channel. There is a chat you can type, you can say hello, so I know that you have joined. And if you have any questions, you can ask them. If you don't understand something, let me know. There is a short delay in the stream, about a few seconds, so hello, I see a few people have joined. That's great. I see 7 people watching, so say hello in the chat. I know you're here. Hello. Hey, that's great. Great to see everyone. Let's wait one more minute and then we will go. How's trading been for you today? Is the sound good? By the way, you can change the quality of the video, okay? You can change it to HD, I think. So if you can't read the charts, change the quality. Okay guys, we will start in a few seconds, so I will just mention one more time, so this is an educational webinar. I hope the sound is good and the video, I hope it's good too. You can change the quality to HD so you can better view it. We are just about to start with the webinar. That's good. Okay, I see 12 people now joining, looking good. I think we can start. So first of all, hello everyone. This is going to be an educational webinar on price action. I'm going to explain some of my targets. We have talked a little bit in the Skype group as well. I'm going to mention them, and if you have any questions you can ask them in the YouTube chat here. I'll be looking at the chat so I can see your messages. So if you have any questions, you can leave them there. We'll look from time to time. So let's get started. I have 2 charts. The first one, USD JPY. Some of you have seen it in the Skype group. This is the hourly chart. Let's go to the 4-hour time frame. So as you can see, there are some lines there. I didn't remove them because I wanted to show you these are the same lines from a few days ago already, the 13th of October, which is last week. So in the middle of the last week. And as you can see, I did my first line, which was this one here, based on this area. I'm going to show you why, because you can see price had a slight resistance here. You can see that on this candlestick, getting pushed down, and also the breakout when price retraced down, but then continued and then continued up. So there was a bullish breakout here. But also you can see the trend line. This is also a trend line I have shared from before. You can see that this is the 4-hour time frame on the USD JPY. For those of you who just joined, we just started, so it didn't miss much. You can see the tops here. So this is pretty basic, very simple line, just one line, nothing too fancy about it. The only thing, the focus was on the highs. I mean the highest price the target reached after falling, okay? So we had a high in this area and then a big fall, and then price retraced back up, made higher lows, reached the same target, and you can see that on the price action on the support and resistance, the big drop. So you try to reach the same area, and then again here and here. So this target line, I had it already when price was moving up. And for those of you who are in the Skype group, the reason I'm saying that I already had it, because so you can understand that this isn't just about past history, because that's easy to see, but this is rather telling what's going to happen in the future, that when price is moving up, you know, okay, we had a target before, then most likely price is moving to the same target, it's trying to reach the same target. So your first thing to do is to look at the trend line. There are also support resistance lines. I have explained them in other videos, but in this case, let's talk about the trend lines here. So after the breakout, when price broke out here, then we could expect a bullish movement, which did occur here. So the trend line here connected this line and this lower high here, and then price continued to bounce off of it several times and did a breakout here, and it kept bouncing in between the two trend lines I have here. So the other trend line based on this this area here, you can see this one and the other one here. So you see that both of them intercept the same point here, the same higher low here. So this is also a support, as you can see, in this area. And let's see here, I had a trade here I shared in the group. So based on these 2 points, I drew this trend line, which happened to intercept. I actually drew this line first, and then I inserted the EMA because I had removed it. And then when I inserted the 99 EMA, I saw that it just happened to intercept my trend line based on these 2 areas, supporting areas, and the breakout here as well. And I also had this line here, this support on the dashed line. Why did I place it here? I looked back and I saw the bounce here. So I look at the candlestick, I hover the mouse above, and I can see where the lowest point was, 103.163. So I placed my line slightly above at 170, so about 7 pips above, not much. So I wouldn't miss the trade. And I think I shared the results in the Skype group. Most of you must have seen it. Let me see if I can find it. Okay, here it is. Here was the trade, was a good one on the USD JPY, a good bounce. As you can see, well in the money, lots of pips, and the entry was good. You can see the black dot, that's the entry point. So price was never out of the money, it was in the money and continued up all the way until the trade ended. So any questions so far? I will try to slow down. I know I talk a little bit too fast, maybe. Any questions so far? Remember this target, I shared this on Skype before it happened. So again, price action can tell you approximately what's going to happen in the future. So it's based on, obviously it's based on probabilities, but it also predicts the potential points of which price is going to react to. That's why we call it price action. So Milos mentioned stochastic. Yeah, in this case also stochastic was helpful. So let's see how many confirmations we had for this trade here. So this is how I think, how many confirmations that I have for this call option that I took here as price was dropping from the breakout of the trend line. So you can see that we had this trend line. So that's number 1. Number 2 was the EMA. Number 3, or in any order, doesn't matter. And number 3, our support line. We can see the support line based on this candle, based on this candle here, based on the opening of this candle, and also the resistance here. So we don't need that much more. Obviously there is more support back then if you want to confirm, but that's okay for now. So 3 confirmations, and then the number 4 is the stochastic. You can see even the 4-hour time frame was oversold, and let's see how it looked on the hourly. Now remember, because this candle turned and closed up there, the hourly wasn't oversold, but it was at the time. And let's see on the 30-minute time frame. Yeah, pretty much. So here as well on the 15-minute was pretty oversold, and the 5-minute was also oversold. So a few time frames were oversold, including higher time frames like 4-hour, and in total we had 4 confirmations, but we also know that the prices are trending up. Okay, now if we open a clean chart of USD JPY, and let's take a look at the same area, but let's go to the daily charts. So this is the daily chart. It's the same area as before, the same trend line that I had based on the 4-hour time frame. Remember, I connected these two, or let's yeah, okay, so look at this. We just drew this line. Look how well it was adapted to this line, and we did this on the daily chart. So that's why it's good to sometimes look at the daily charts, because you can see the big volume here. Look at the large volume of buyers. So this was a good confirmation for me, as well as this bounce here for the trade to take here. So you see the past history tells you about future probabilities, future opportunities to take a trade. So I hope you understand that. That's why I talk about these trend lines, share them so that you can understand how the price might react. Obviously, the price won't react to them every time. Sometimes it will drop out, but since there was such a large volumes in this area, you could expect at least a short bounce before it would continue down. And you can see that, yeah, very well there was a short bounce. Well, in relationship to previous price, it was actually, and the expiry time I chose, it was actually a quite big bounce. I think my trade expired already here, so it was a decent enough bullish bounce for us to take this short option. Now we don't care if this is gonna come down and break or continue up. We just cared about this point of entry, and it worked out. So another trade I also wanted to talk about, I got some questions about it in the Skype group. Let's see here if I can find it. Yeah, here it was. So today when I came online and I opened my charts, and the first thing that I saw was that price was moving up, but it had also broken. Okay, so that's why I don't want to zoom in too much like this. Okay, so I want to have a good look, a good overview of what's going on. Now this is the 5-minute time frame. I immediately saw this, that price was bouncing here, right? You can see that everyone was bouncing here, and then the big drop that came, then the big bounce back, then price made another low, another high, a lower high, and that's a good sign that price is trying to retrace back to a target. Now how we know if it's going to be a bounce or a break. You can't know for sure, but what you can know is that based on previous history, if you look at previous history, you can see that on this earlier entries, you could see the bounce, and we had 4 confirmations. That was how we could know. We had 4 confirmations. We had the 2 trend lines, the trend line, the EMA, the stochastic was very oversold, and we also saw how price was reacting so well to our earlier trend lines. Let's look at the other chart again. Look how well price reacted to these other 2 trend lines based on price action history. So based on recent history, I was expecting a bounce here. And as I said, I don't know if it's going to break the next time. So that's why I most probably won't take another trade here. If it comes down, rushing down, I will avoid it because I don't know if it's going to break or not. I just knew there were buyers in this area, and there were buyers in this area. And they came in, they pushed the price up. Now if they continue, then we could expect the price to come up, maybe even retrace back to the trend line, or at least to this area. If it doesn't, then it might go down, maybe to this area. So we can just set up targets and then expect the price to react to it based on the confirmations we have, like stochastic, EMAs, volume of trades, and the time, how much price has fallen, and things like that. Now in this case, I saw price has been falling for, you see these are 4-hour candles, so price has been falling all day, and it was reaching a strong support. So you expect the price to get at least some support before it will break it. So that's how you can tell what's going to happen approximately. Obviously it's a probability. So now let's get back to the trade. I hope that answered the question somewhat. Now in this case, I immediately saw the resistance here I was talking about. I saw prices moving up, so I thought, where is it going? Obviously it's trying to retrace. Again, you cannot be certain, but you can guess that it's trying to retrace back here. And this might be hard to see, so I'm gonna also draw a line here, actually 2 lines, so you can see from the highest point here, you can see how it's creating a channel like, remember at the time when I drew this, these 2 lines, price was still here, okay? So I didn't know about this. I didn't know anything about what's going to happen. Price was here on this candle. So let me put a arrow here. So price was here, moving up, and I thought a retracement to this area and then a put option, which I did. Let's go to the 1 minute chart, and I'm going to show you why I actually waited a little bit. When price came up to this candle here, it didn't immediately jump in. I saw this area here. I thought it will either drop here, that's why I wanted to take a put option here, and I tried to move up. When I saw this candle, I waited, and I thought, okay, so we have an actual precise drop from this area. So I think I got in, I shared the picture again, in the results are in the Skype group if you really want to see that I actually took the trade. You can look it up there. So I took the trade, and the broker's price varies from my price. I think my entry got in at 420 actually here, but regardless, I gave it enough time. It dropped back from that resistance to this area. It closed on this candle, on this bullish candle. So it was a good trade, and looking back on the history, you can see 5, 10, 15, about 15 minutes was a good, even 20 minutes was a good expiry, so based on previous history. And here you can also see 5, 10, 15, price held below, so before starting to retrace back up, so around 15 to 20 minutes. And also this was there was around 30 minutes before the news was coming out, so I didn't want to give it too much time so it wouldn't get affected by the news outcome. And in this area, the news came out. You see the big jump, and then bounced down again, went below, and went back up again. So this was the news candle here. And you see that it again retraced back up. This time tried to get up higher. Now this time I had my EMA again that I plotted just to see where it could potentially be going. And as you can see, the EMA was up here. And if you look to the left, you can see the target here. Everyone sees this, right? So again, when the price came up and broke this line, I had this target. Again, I shared this in the Skype group that I think, if you look it up, I said I think it's going for this EMA here. And I set up the line, and you can see it almost reached it and then came back, broke the lower channel. If this was our channel, you can see this. So it broke and went to our lower target that we talked about on the 4-hour time frame just now for the call option. So that's how you do it with setting up your targets. You get confirmations from support resistance lines based on candlesticks. You get trend lines, again based on candlesticks movements, higher lows, lower highs, the bounces, and you get confirmation from stochastic, from EMAs, from major trends, different time frames. So I hope that explains a little bit how the thought process works. And about breakouts, I know I had some questions about breakouts. So you can see, for example, in this area, an example of a breakout. Price retraced up, failed, came below the EMA, and again broke the EMA, continued up. So how do we know when there is a breakout? Now this is really hard. I've shared some breakout trades in the trade in the Skype group. When let me bring back my other chart. For example, when a trend line gets broken, I don't immediately jump in because usually there is a retracement. So normally I wait for the retracement because I think those are higher probability breakout trades. When you get to see price coming back, maybe even making the stochastic overbought even better. Like in this case, it's below the EMA. You can even see the stochastic declining. If you draw a line here, you can see it's declining, but you can also check out different time frames to see what's going on. So sometimes, as you have seen in previous webinars, I have entered put options when the stochastic has been oversold, completely oversold, because sometimes you cannot just rely on the stochastic alone, but you rely on the price action. When price comes up, it doesn't manage to break in the channel again, break inside the trend line again. And normally you should have a target. Like in this case, we had a second target. We expected the price to come down to this area. So that's how you can treat it when you have a target and your line gets broken. And again, in my case, I usually wait for a retracement back up before taking the trade, if it's a breakout, because I don't want to get stuck in the retracement. And I tend to give it a longer expiry when I take these kind of breakout trades when it's based on higher time frames. Again, as you have seen examples of that in earlier webinars, I've done 1 hour, 2 hour expiries on the breakouts because it's been based on hourly. But sometimes they're based on the 1 minute chart. Like in this case, you can see price was retracing back up to this level, broke the EMA, came up here. And in these cases, when price is very close to your target, you could use short expiries. I know some of you do it in the Skype group, like Gabriel. You do this a lot, 5 minute expiries. These are actually really good trades when you have a target, price is rallying up towards it, you get in on a low and you get a good trade in the money all the way. And of course sometimes you can get in late, like if you would have gotten in here 1, 2, 3, 4, 5, you would have lost. But I don't usually do below 5-minute expiries if price is really close, because I'm going to show you here a trade. I was actually going to take a 5-minute trade today, and it was here based on this candle. I want to get in when this candle opened up here. So on this candle I want to get in for 5 minutes. So 1, 2, 3, 4, 5. I would have lost this. The reason I didn't take this because the target was so close. It was so close, I was expecting that maybe the next candle is already touching it, and then comes the big drop. And you can see that based on price action, there was a big drop before. So even though we didn't get the same big drop, it was enough for our trade to have expired out of the money. So if 24 option had the 3-minute expiry, I might have taken a 3-minute expiry, but there was either the 60 seconds or 5 minutes, and I would have lost the 5 minute. And as I said, I don't do 5-minute trades. I think I've pretty much talked about everything. I will let you guys ask some questions. I know it's a lot to digest. Not everything is simple. There's a lot of things that are based on experience. So I've been talking for about 30 minutes. I will let you write me some questions. Everything good? Anything you didn't understand? Okay, if everything is good, and in that case we can wrap it up for today. Okay guys, thanks for watching. I will see you in the Skype group. If you come up with questions, you can ask them there. Yes, I think someone wants to ask something. Ernesto. Can go ahead and type your question. How to identify the support resistance lines. Basically look at the candlesticks, look at different time frames, and look at the volumes, the number of touches. Usually it's a mix between candle wicks and candle closing prices and opening prices. So the large volumes are good. For example, I had a trade in this area. Let's see, if you look at the daily, you see the daily line was broken, but then there was support in this area. So there is a mix. In this area there was only candle wicks, but some areas you will see this a mix of candle wicks and candle bodies. Okay, so you can check out some of the older videos. I have explained about support resistance there as well. So if you look at those videos, you will see many examples of those trades. I get a question about what time frame I start with. Not usually, as you saw with the USD JPY trade today. My first trade was actually based on the 5 minute. I just opened my charts, I saw the 5 minute time frame, I saw something I liked, I drew my line, I took the trade. Obviously, I did look at some other time frames, like I looked at the 15 minute and I saw the big drop. I saw it on the, as you can see on the 30 minutes, not so good, but on the 15 and 5 minute time frame, it was a good big drop. I saw that and I used the 5 minute only for this trade. But then the other trade here, I used the 4 hour time frame mostly. But then both of them had short expiries, about 15-25 minutes. So what I use is based on what targets I have, where the targets are, what I see, what kind of trends I see. So I advise that you look at as many time frames as possible. And I think my Euro USD trade just expired as well. I took it on this touch here for an hour. We talked about this in the Skype group as well. I've seen this trend lately with the Euro USD. If we go back, for example, let's take a look at different positions. Here you go again at 10:30. You see the time here. Price retraced back up, and this is a pattern I've noticed lately, so I want to take advantage of this today. But obviously I didn't just jump in because of the time, but because there was support. Here again you can see 10:30 and then price reversed in an hour, and you can see there is an area where this didn't happen, obviously. Here it happened again. Let's see here. Sorry, here it didn't happen. If we look at the hourly, you see a pin bar. So here you go. The pin bar here on this candle just broke the daily resistance. So in this case, it wasn't strange that it didn't happen, but it did on these other places. So that's just a trend I just noticed recently, but it's obviously not gonna work every time, but there was a daily support in this case, so I felt better about it. As you can see, it worked out well. Let's see another question. Milos mentions about currency correlation. Yeah, I've mentioned that too, Milos, in the Skype group. You're absolutely correct. I use this a lot. That's why I like to have my chart like this. I have one Euro USD and the other USD JPY. So when I took the call here, actually today, I was also looking at the Euro USD. There. So this candle was coming down at the time. It was the last 5 minutes it rushed up, but it was coming down, it was breaking from this area. Sorry, from this area it was coming down. And so currency correlation works a lot. I like the currency correlation between USD JPY and Euro USD. And you will notice that some days you have positive currency correlation, sometimes you have negative currency correlation. So when you have a positive correlation, like both of them are going up, and then some days you have negative, one is going up, the other is going down. You can see that. I mean, if you just look at the chart, you will understand the concept of currency correlation. Look at the hourly charts of both charts. What do you see? 1, 2, 3 bullish candles. You see 1, 2, 3 bearish candles. So today we have the negative correlation. Euro USD is going down, USD JPY is going up. So just open a chart between any assets that you like, and you will understand how the correlation works. And so this is another confirmation that I use besides the price action itself with the trend lines and support resistance. Get another question about what I take into consideration before taking trade. I like the time as well, the time pattern. So for example, I was looking at, let's see, this trade here. I took the trade for about 25. It was, the candles closed 5 minutes before half hour. I was expecting or rather I was afraid that the half hour would come down, try to close here before bouncing up, but it didn't happen. But again, this is sometimes I take into consideration, like whole hours and half hours, where the hourly candles want to close, where they're most likely to close, are they going to bounce off or not. And that's a bit difficult, but you will get the hang of it if you look at the candlesticks. I think that's good for today. Good questions, good participation from you guys, and we'll see you in the Skype group. We can discuss more, and have a good further night. Thanks for watching.